Hello traders, welcome to another video. Today is August 25th. We're going to be looking at Bitcoin. We'll look at the S&P 500. We'll look at a few other tools that we normally usually look at, like the BTC.D chart, the Bitcoin dominance chart. That's a pretty common chart that we do look at. So we always like to start off looking at the large time frames. So we'll take a step back and we might actually switch to a different chart, because this does have a lot of detail on the 1 hour, 2 hour, 4 hour, that sort of time frame. So I'm just going to take a step back. We've got a blank, brand new, fresh chart here from Bitfinex on the logarithmic chart. So we're gonna take a step back from the smaller time frames for a moment and get a better understanding of where we currently are. So I'm sure, as everyone is aware, we were in that nice squeeze that we were talking about for many months, and we broke out of it, and now we are holding above the first target, and we've made our first impulsive push to the upside. So what do I mean by that? If we take our arrow, and if we basically get the size of the structure, and then we're going to be looking for where we actually broke, which is right basically at the 10K zone, and then we came back to it after we initially broke up to the upside, and then that is basically our first target right there. So then if we look at this zone, that was the neckline for the head and shoulders that did not break, and we invalidated the head and shoulders because we broke above the, that is the neckline, that is the neckline, the shoulder, and then that is the top part right there. So that is the break neckline at this point at 31, and the top of the shoulders is going to be around 43. So we invalidated it, breaking over the 43K level. And this is our first consolidation that we can see within the weekly chart, because the two previous candles were pretty bullish, already breaking this major zone. And then if we're looking at it from within that consolidation, we see it's 5 candles, 1, 2, 3, 4, 5, 1, 2, 3, 4, 5 candles that were green bullish candles, and this is our first bearish one, but we still have 3 days left until this weekly candle is going to close. So on the large time frame, this is a major level. We've invalidated it, which looks great. We could see a pullback, and we have seen. I don't think it's going to go all the way to 42, but that is, in my eyes, worst case scenario. Is we do go back to around like the 42, 43K range before we start to continue higher. But the reason why I don't think we're going to be having that is if we look at this in a smaller time frame, you'll also see a structure kind of similar to this. Let's just bring that back, where you get a nice squeeze, and we'll take a look at that in a smaller time frame. But just looking at the major horizontal zones, we've already broken out of this trending range above the 40K range, and now we are trekking up to the next major level, which is going to be around the 60K range right around here. So in my view, we are on our way up to this major zone, and once we break past the 60-ish K range, I think it's going to be home free. We're going to be continuing to the upside with great authority from the bulls. So now moving on to the 2-hour chart. Now we can take a little bit more of a clear view on what this actually is going to look like for the wedge. So we see a high, a lower high, lower high, lower high, and then this is the key inflection point for this consolidation. And wouldn't you know, it is basically perfectly lining up with this series of lower highs, as we can see right there. And I'll just make that red, make it a little bit bigger so it's easier to see, and then we can see this series of lower lows is creating the bottom of this wedge formation. And if we like, we can also just put in a little split right there to give it a little bit more context when the price is trading within that zone, because there is a zone of sensitivity within that area, and it does prove to be a pretty key zone at times. So at this point, we've just broken out of this level, and now we're slowly trekking up. And if we're looking at a smaller time frame, which we will, we actually see an ascending wedge, similar to what we saw right here to some degree, if we do recall right there. And then we can also draw that in there on a smaller time frame. But we do see something similar to that within this structure, which means that if we do break to the downside, we could see a descending wedge or potentially like a reverse head and shoulders at a local low, something along the lines of that, some reversal formation. It could even just be a nice bottoming formation. You get a series of slightly lower lows, and it turns into some higher lows. We'll definitely have to check it out when the time comes. But if the ascending wedge does break to the downside, it would be looking like we're going to see some consolidation for Bitcoin. But until then, our bias is still bullish. So we can see it's kind of arcing, it's kind of banana shaping, similar to what we saw here within the ascending wedge. And we'll draw in this the two ascending trend lines in a smaller time frame. But when we are getting into the impulsive push, let's get our little snip here and then draw in kind of what we're seeing right now. So we're going to get this guy here. So this is the major ascending zone that we were talking about, or descending zones that we were talking about. And then you saw a squeeze within this zone right here. And then we saw our first major impulsive push. And then this little wind up right here. We can see it on a smaller time frame, but this little wind up right here was the structure that needed to form in order to push the price beyond this major zone of confluence, where you have the horizontal zone and the descending zone coming together at the same area. And then you saw the strong push from this zone. So this is the wind up right here. And then you get our strong push. And then my speculation is we could get another wind up like so. And then you're going to get another strong push. So we could see a slight consolidation, which we're seeing right now. Could see a continuation, a little bit of the consolidation to build up the momentum to form the new push, or the new impulsive push to hit that next major target right around here, around 60K. So we've already made that push initially out of the zone. We see a very strong initial push, and we see it kind of flutter out slowly as time goes by, because a spring needs to be caught back before it starts to explode. You can't have never-ending explosions without some sort of reset or some sort of way to allow that momentum or allow that wind up to take place. The markets don't go straight up. They need to wind up. They have very volatile, expansive moves, but then you have these winds where it just slowly fades and slowly reduces the volatility before you get the expansion and volatility again. And these are the points that you're able to really get those nice, well-defined structures. And that's what we're looking for. This isn't perfectly ideal. This wedge right here, this wedge was a lot more ideal, which was really great to see. And then we saw the next wind up right here, and then we saw the next impulsive push. So we could see another wind up here before the next impulsive push, which I wouldn't be too surprised about. So now we're going to take a look at the actual impulsive push that we are currently seeing right now. So let's go on to a 12-hour chart. Zoom out a little bit and get our trend line. So we can see a low, a higher low, a higher low, higher low, higher low. So it is creating higher lows, which is great to see. So we can just connect the higher lows here. Now this is very ascending, and I'm quite wary of actually drawing any majorly ascending trend lines. I do like to look for trend lines that are a little less aggressive, but if you are looking at it just from connecting three major points, that definitely would classify as either a wedge or an ascending channel, depending on how you want to look at it. But I would classify it a little bit more as a wedge. So we don't see a break yet in the price. You could argue that you do, but in my books, you do need to see a validation and break in the confluence zone, not just the ascending trend line, and that kind of reduces the amount of false breakouts that you're able to see if you're just relying on an ascending or descending trend line. So we see this nice well-defined structure, impulsive push, correction, impulsive push, correction. You see less higher highs getting created, which isn't fantastic, but it is still holding that higher low, which is good. If we do start to trade below this low right here, we can see if we do jump to a 6-hour chart, you see that there was quite a bit of hesitation here before that push to the upside. So we can see that zone right around there is going to be the zone of confluence. So if it does break below where we currently are and start trading below the 46K range into the 45s, that's when we could start to see a pullback here occur from this ascending channel formation. So if we draw our ascending channel here and then get our dashed line there, what we could see here is our first impulsive push, and on a larger time frame we could get some corrective moves. So if we actually do a print screen like so and draw in our ascending zone and then draw in our resistance area, and then this is the initial push breaking out of the contraction that we've seen. So this is the contraction, this is the descending zone. Let's actually put it right here. This is the deep contraction, and this is the first major push to the upside. And if we do get a break in this zone of confluence right here, I am expecting some consolidation where we would get probably some contraction and volatility, probably either a wedge or a channel before the next impulsive push to the upside. But if we do break this zone of confluence here, I would not be surprised if we create a descending resistance zone right here. Maybe if we create a key descending zone right there, but I wouldn't be surprised if we see a pullback below our current level of support, contracting, making lower lows and lower highs, just consolidating. Not really great to trade in unless you're looking for a longer term setup, or if you're looking for a very, very, very short term setup, that could be an opportunity. But the multi-day setups when you're on a 6-hour, 4-hour chart within a structure is pretty difficult to really be able to capture a significant move in unless you have very, very tight stops. But that's going to be my view of the 6-hour chart. We'll take a quick look at what's happening within this current structure right here, because we see a nice settling down each time before an impulsive push. So we'll take a look at this settling down and seeing what we're able to identify, because if it does actually hold this zone and start creeping back up, we have a lot of ways to go, around 59, 57K, before we start to see a lot of hesitation from this series of higher highs there. So let's go to the 4-hour and jump right into the 2-hour here. We're not going to really talk about the momentum to get to that zone. You can kind of look at the previous videos for that. We saw a very well structured zone right here, but what we're really looking for is this major level. We have major 2 zones here for 2 major levels. The first one we've already identified, which is the 47K, 46.8K, somewhere around those lines there. And the next major zone is going to be this zone right around here, which is around the 48K zone. So the 48K zone is the main zone that we've been talking about. We have been holding this zone of confluence so far, but ideally we do want to see the price hold above this 48K zone on the longer term. So then on, like, let's say the 12-hour chart, if we zoom right in, it does come right back up. And then on the daily, we can see, if we just pull this back a little bit, you do see this bullish candle right here, this guy right here, hold this previous level of resistance, which is around 48K, 47.9, 48K, hold it. And now if this candle does close below it, it wouldn't be ideal, although it's not completely over until we break this zone of confluence. If it does, then we definitely have to worry that there's going to be a deeper pullback around like 43s, 44s, something along the lines of that. So going back to this current structure here, I'll draw in our ascending or descending zone right here. This is going to be our descending zone like so, and then we can make it green, make it a little bit larger. And I'm currently looking at an expansion zone because we see a series of lower lows getting more and more aggressive up until the point where you're going to have potential double bottom right there. And then you can see the top here, a lot of hesitation, where initially I did think it was going to be a break, where let's just make it red. I initially did think that this was a break in the descending zone, so I thought this was going to be the break, to be completely honest. And let's get the arrow where I thought it was going to go and continue to the upside. I thought we were going to basically call it to a T, which I was expecting to continue to the upside here. So obviously that did not go as planned. But if we do look on, let's say, like a 6-hour time frame, we do see that, let's say, a 4-hour. We do see there is hesitation within that range there. Obviously, it did break that area even on a large time frame. So that's just unfortunate for my TA, to be completely honest. But at the end of the day, it has not broken the major level of the ascending channel, ascending wedge, whatever you want to call it. So I am not expecting this to fall too much further because there is a lot of confluence with this support level right here, with the two zones of support right here. So there's quite a bit of demand there. But the 50K zone that we have been really hesitating to break above is equally a major level of demand. Let's just make that red. So we'll definitely have to see if it's able to pass it. So this is the third attempt that we've seen for this 50K break to get to the 60K zone. And so we'll discuss that a little bit. The first major potential break was this zone right here where you got this squeeze. That was the option 1 for your first break. So that was your first break attempt. Let's just draw that in. Your second major break attempt was going to be right here, like so. It was kind of like that. Maybe it was a little bit like that instead, kind of like so. And that was your second major attempt, which failed. And then you have your third major attempt, which was kind of like so, which is what I initially drew. And that was going to be the third attempt, but that failed quite quickly as well. So now we are kind of at a point where we do hope it holds, but I think we're going to have some sort of consolidation, some sort of price action structure that's going to form within this area in order for us to look a little bit more bullish. Because as of right now, that does not look very promising for the buyers, to be completely honest with you. It does look a little bit more bearish than it does bullish, especially if we break this 46.8K zone. Then I do think we will start to see some downward pressure. Good time to be solely dollar cost averaging into your favorite alts, but I would be hesitant to be really using any leverage if we do start to see a break within that 46.8K, because a small move to the downside if you're on 5x leverage is pretty devastating. So that's my view on BTC. Let's quickly talk about the BTC market cap because it is still looking very solid. I really want to see the BTC.D chart hold the 45 zone to the downside. I do not want to see it continue to push to the upside here. It is doing well and holding this level. The goal for this chart is to see it just absolutely dump, because that would be a great situation for altcoins, because they're going to be appreciating at a greater rate than Bitcoin. So not a whole lot more to add on this chart. We do talk about it quite frequently, and it's a chart that we talk about on our Discord. If you're not in it, definitely check it out, because it is something that is overlooked often, and in my opinion is a very useful tool to have in your tool belt. So we're now going to look at the stock market here a little bit. So let's just continue to look at the other charts. The one thing I look at to give me some perspective on Bitcoin is the traditional market, mainly the S&P, Dow Jones, and the volatility index for the S&P. So I look at how the volatility is doing. What's it? Is it increasing? Is it decreasing? Is it very contracting? Is it just coming out of a contraction? And as of right now, the S&P just recently invalidated its potential head and shoulders, which is a great sign, because that means speculators are still speculating and there's bullish activity in the market. And the volatility index for the S&P is dropping at a major kind of level of support. Hasn't reached it yet, and I think if we are able to break this around 15 range, it would be phenomenal, because we'll continue to see the S&P move to the upside, and that would give away Bitcoin and most, if not all, cryptos to continue to do well and break out of this current consolidation that we are in. So the traditional markets is setting us up and allowing us to continue to the upside. We just need to see that initial push from Bitcoin, I think, to really get that second wave for the alts to come away and kind of surprise everyone to some degree. There are some alts that have already surprised a lot of individuals. Solana, Cardano, those are the two that just pop in my head right now. But I think when time goes by a little bit later this year, there will be even more surprises with very, very significant all-time highs that were unexpected to be reached. So, in my opinion, good things to come for the rest of the year. So, going to be continuing on here. Going to be taking a quick look at the dollar. This is the DXY, and it is looking like it is able to hold the 92 range, which is not fantastic. Brent Johnson and his dollar milkshake theory could be turning out to be truthful and actually come into fruition, because he was saying that there could be a world where we could see a rising gold, rising S&P 500 or stock market, as well as a rising dollar. Usually the rising dollar in the S&P or rising dollar in gold are negatively correlated in terms of gold going down. If the S&P or the United States dollar goes down and the United States dollar goes up, gold goes up. That would be positively correlated. So people were assuming that they're negatively correlated. But Brent Johnson is possibly indicating that, or he is indicating that it could be a possibility that there could be the dollar increasing in value as well as the stock markets increasing, and also there could be a risk on sentiment. So it could be a very awkward investing environment, but we could see a slight detachment basically from the negative correlation between risk on and DXY going down to both risk on going up and the DXY going up. So it's not completely out of the question if we do see a bottoming, because this does look very, very solid if we're looking for a bottoming structure. Obviously, we want to see a slight pullback here, but if we do start to see a slight rally up until the 94 range, I would be hesitant to look for any sort of negative correlation if the S&P is still continuing to the upside. Ideally, we do want to see the dollar go down, but at this point, it does look like we could see it come into fruition where we are seeing that dollar rise, we're seeing gold rise, and we're seeing the stock market rise. So if you don't know who Brent Johnson is, definitely check out the dollar milkshake theory. It's a pretty interesting theory, talking a little bit more in the global macro perspective, but it's worth checking out. So on the smaller time frame for the DXY, very similar. We are seeing an ascending zone, and we're, for me at least, expecting a pullback here, a dip where you're seeing a nice pullback, which ideally would really correlate well with BTC holding that ascending support zone. And then once you see that dip in the DXY, that is when you might see like a little bit of a wind up before the next solid push to the upside. So that's my personal view of the DXY. We'll see if it actually comes into fruition, but that's the next little while's overall projection that I currently see for the DXY. So thank you very much for watching. That is basically all we'll get into in this video. Unless Bitcoin's going to be moving up, I don't really expect many of the altcoins to be doing extremely well. Especially now because we've seen BTC consolidate for a little while here. Bitcoin really needs to start a lot of the momentum in order for many of the alts to continue to climb, or at least reverse from their consolidation or slightly significant pullback that they have been seeing recently. So the main focus is going to be Bitcoin, and once we start to see the Bitcoin rally, recover, and move to the upside and start making significant higher highs and be able to continue this trend aggressively and break this 50K zone, then we'll start to look for altcoin leverage trade. But until then, we really want to just focus on Bitcoin, because that is going to be the main market that is going to be impacting the rest of the crypto market. And that's why we always look at the S&P as well, because the S&P and the overall market does impact crypto. So thank you for watching. Hopefully you enjoyed it. If you do think that this was useful, entertaining, informative, anything along the lines of that, we would very much appreciate you subscribing and giving us a thumbs up so we know that we should continue making more videos like this. So thank you very much for tuning in. Until next time, have a good one, traders.